Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I'm going to talk about Apple stock to give you the new fair price and to understand better what is going on right now in the markets because we saw a lot of volatility during the last few days and it's interesting to understand what is going on. How far can this goes down or it is finished already, okay, this pullback. So this is what I'm going to talk about today, okay, and obviously I will show you real numbers because that's the only way that investing is done, with real numbers and not just talking. So the only thing I ask you as always is to leave me a like. It's very important for the video itself and for the channel too, and subscribe to the channel. Let's begin. Now, briefly, before we start, guys, you have noticed probably that I haven't uploaded any videos in August, okay? And this is because I got some health issues, and that made me lose a lot of time with a project that I had to complete. I had a very strict deadline, so I had to put myself 100% in that work, in that project, otherwise I wouldn't do it. Okay, so sorry about that, but YouTube for me is just a passion, is a hobby, and I like to bring you quality videos, so they require time. Anyway, let's start and let's see what is going on here, because we saw how during the last 5 trading days Apple went down, okay, went very down, around 20% at the top max. So we had the split 4 to 1, but that doesn't actually very affect the price in the long run. Anyway, let's see the new analysis. So because I have already done one, anyway, it was before the split and before the Q2 earnings release. Okay, so now let's see what has changed and what is the fair price of the stock. Now, obviously, just briefly, I have already shown you these things in the previous analysis. Anyway, just to summarize the business, the net sales by category. We have the first main slice of the cake, 55%, which is the iPhone division. Okay, so the 55% of sales are from the iPhone division. Then we have the number 2, which is the Mac division, okay, 10%. 8% is the iPad division, and 4% is wearables, and 5% is an increasing slice is services. I had already shown you in the previous video how the iPhone category, which is the biggest one, is going through maturity, okay? It's becoming a mature side of the business, while the wearables are going up, okay? So wearables, very interesting business for Apple right now, with the Apple Watch, the iPods, and all those kind of stuff, as well as for the services category. Okay, so here is where you have the App Store and all these kind of things going very high, parabolically almost, okay, over the last 5 years. And that's another very, very good part of the business for Apple. While I showed you as well that the iPad is not going well, actually, just decreasing over the last 5 years and then a little bit better in 2019. And the Mac category is quite constant, okay, with a drop in 2015. Anyway, it's around $25.74 billion in sales. So in this graph, we can see the revenues and the net income from 2015 to 2021. They are an estimate. So we can see how overall the revenues went up from 2016, and then the net income, because the net margin are very, very stable, around 21.5% for Apple. Okay, it's a very stable business under this point of view. And analysts are predicting 273.31 billions in revenues for 2020 and 307.67 billions in 2021. Now, these are actually updated as of the second quarter released. Now, we just saw that Apple reached $2 trillion, which is huge, is something incredible. And we can see from 2005 to 2019 the revenues behavior, okay? And we can see that the business is going through a state where it is mature, okay? It's not growing anymore like it used to do from 2005. Look at the slope of these two lines over here, okay? It's pretty understandable. And we can see that from 2005 up until 2015 has been a sort of a parabolic run. Okay, and then now, as we saw in the previous graph, things are flattening, and that's what is happening. We cannot logically think and imagine that Apple will continue to do that in the next 10 years. Okay, and this is something to keep in mind when we are investing in Apple. When we want to buy, if we want to buy Apple at $2 trillion market cap, we have to ask ourselves, wait a minute, will it continue to grow so much that this price today is explained? Because this is the main question, okay? It's a good business, but it's the right price. And this is what I'm going to show you just in the analysis today. Now, let's take a look at the balance sheet. Now, this is from 2019, so it's the annual revenues. But importantly, we have to just look at the net margins, which overall they are quite stable. As we can see from here, the net margin until 2014, 2013, they have always been around 22 to 20%. Okay, so very stable business, and that's why also the discounted free cash flows really works in this case, in my opinion, okay? Because in a mature company, we can apply it without any problems. Now, more important is the balance sheet, actually, updated to the second quarter of 2020. So this is from the end of June. And we can see that the total current assets and total current liabilities 140.06 billion and 95.31 billion for the liabilities, okay? The current ratio is above 1, it's positive 1.47, and that's great. The total assets and total liabilities 317.34 billion and 245.062 respectively for the liabilities. The stockholders' equity 72.28 billion dollars, and that gives us a ratio total assets divided by total liabilities which is above 1.29, and that's great as well. What it's not 100% great in that case is the debt to equity ratio, because it's 155.95%. When we deduct for cash and cash equivalents, we have the net debt to equity ratio, which for the first time in this quarter, because in the previous quarter it wasn't, but this time it's above 100%, okay? So 109.76%. This is, okay, they are not gonna go bankrupt, but financially speaking, they are starting to have some debt, okay? Something to keep in mind. The market cap, $2.069 trillion, and the book to value, which is huge, 28.62, suggesting a very high growth company, usually around 25. Above 25, they are high growth. And now we have the most interesting part, in my opinion. What is the fair price of Apple? That's the question that a lot of people are asking probably right now. I mean, is it cheap? Because a lot of people just thought that after the split, okay, it's cheaper, let's just buy it. Okay, I read someone commenting in internet, but that's not how it is. It's like if you have a cake and you do 10 slices or 30 slices, okay, but you still have a cake, and that's the same with stocks. So even if the prices look cheaper, actually it's not cheap at all, because the market cap is huge. And let's see what is the new fair price, and to do that, as always, a discounted free cash flows, analyzing the previous 5 years and trying to predict the next 5 years, okay? So these one are the analysts' estimates for the revenues that I showed you before. I just took the averages. So this one is the net income margin, 21.8%. And this one is the free cash flow divided by net income ratio, okay, 111%. It's an average of the last 5 years. And we are gonna do a scenario analysis from 2022 to 2024 growth rate, okay? From 8% to 14%. And analysts are predicting around 12%, okay, 11.5. So let's see what we get. Let's start with the first scenario. Now, the requirements are this one, 9% as a rate of return for the capital, because this one is free cash flow to equity, okay? So 9% just for the equity looks great. And the perpetual growth, 2.9. Considering the size of the company, we cannot put something bigger here, okay? It doesn't make sense. Let's see what we get. 8% scenario. Once we discount the future cash flow, we get at today's company valuation of 1,395,000,000 and divided by the total amount of shares outstanding, we get a fair value for Apple today of $81.59. With the 10% scenario, we get a fair price of $85.56 per share for Apple today. While in the 12%, which I just put analysts, because this is what analysts are expecting, the fair price today is $89.68 per share, okay, with a today company valuation of around 1.5 trillion. And then we have the positive scenario, okay, the optimal case, 14% growth in 2022, 2023, and 24. Which is absolutely insane for a company who is already that big, okay? It's a very optimal case, let's say. And we have that today's company valuation, in that case, it would be $1.6 trillion divided by the total amount of shares outstanding. The today's fair price would be $93.94 per share for Apple, okay? So that's it. We take an average and we have the average fair price today, it's $87.69. So that is the fair price today. Now, I'm not gonna deduct for the net debt because it doesn't make much sense, okay? Because it's 79.34 billion, which compared with the equity is more than 100%. But comparing with the market capitalization, it doesn't change much. So that overall is an ideal fair price. Now, obviously, at this price, I like to put a margin of safety, okay? So if Apple goes down, I don't know, 20% below that price, well, that usually when as a value investor, as someone that buys because of fundamentals, that the price that you want to see in Apple, okay? Now, the price of today, 117.8, for me is too much for a company like Apple. And I'm gonna be honest with you, it's too much. I will not buy Apple today at that price. And when a company is too much overvalued, what you see is this kind of volatility, okay? Because this is speculation. The market goes up, goes up, goes up, and then boom, 1 day, 2 days, 3 days, it drops. It drops like crazy, like Tesla yesterday, minus 24, 23%. It was huge. So I like to invest because of fundamentals, and right now I'm not gonna buy Apple at that price. If it goes below 87 point something, well, I start to think about that. Anyway, we have to remember, as I showed you, that Apple is going through a more mature state and they are continuing to do buybacks. Now, this thing, honestly, it's kind of good over the short term, but over the long term, it's not much wise to continue to do buybacks. $2 trillion market cap, because with the same amount of money that they were doing buybacks 5 years ago, now they are buying 10% of what they were buying 5 years ago. You're actually using your money and you're having a way less effect on buybacks. You know, I would prefer if they use this amount of money in a different way. Anyway, that's their visions. They like to maintain the high growth status, but overall, for me, that price is too much right now. Let's see what is going to happen. You saw the numbers, so if you see this kind of volatility, you will understand why, okay? It's not strange. It can go literally without any problems below 19, okay? It would be something great, actually, for the price itself, meeting the fundamentals. All right, so I hope you find this video interesting. Leave me a like and leave me a comment below. Tell me if you are planning to buy Apple or if you sold something, okay? And subscribe to the channel, and as always, have a wonderful day.